A hedge fund is an alternative investment vehicle that pools capital from high net worth individuals, institutional investors, and sometimes even retail investors to pursue higher returns through more complex and aggressive investment strategies. Unlike mutual funds, hedge funds are subject to fewer regulations and can engage in a wider range of investment activities. Hedge funds are typically managed by skilled investment professionals known as hedge fund managers. These managers employ various strategies to generate profits, often with the aim of outperforming traditional investment vehicles like mutual funds or stock indices. Hedge funds are known for their flexibility and ability to adapt to changing market conditions, as they can employ both traditional and alternative investment techniques. Here are key characteristics and features of hedge funds. Investment strategies. Hedge funds can employ a wide range of investment strategies, including long and short positions, leverage, derivatives, arbitrage, distressed securities, global macro, event-driven, and quantitative models. These strategies are often complex and may involve higher risks compared to traditional investment approaches. Limited regulation. Hedge funds are typically structured as private investment partnerships, allowing them to operate with fewer regulatory constraints compared to mutual funds. This flexibility gives hedge fund managers more freedom in terms of investment choices and the use of leverage. High net worth investors. Hedge funds generally cater to accredited or qualified investors who meet specific net worth or income requirements. This includes institutional investors, such as pension funds, endowments, and wealthy individuals. Some hedge funds also accept investments from retail investors through funds of funds or alternative investment vehicles. Performance-based fees. Hedge fund managers typically charge both management fees and performance-based fees. The management fee is usually a percentage of the assets under management, AUM, while the performance fee is a percentage of the profits generated by the fund. This fee structure aligns the interests of the managers with those of the investors, as managers are incentivized to generate positive returns. Limited liquidity. Hedge funds often have limited liquidity terms, meaning investors may have restrictions on when they can redeem their investments. Lock-up periods, usually ranging from months to years, are common, and redemption requests may only be honored at specific intervals, such as quarterly or annually. Sophisticated investors and risk management. Hedge funds assume that investors have a higher level of sophistication and risk tolerance. Investors in hedge funds are expected to have a deep understanding of the strategies employed and the potential risks involved. Hedge fund managers typically have dedicated risk management teams to monitor and manage various types of risks, such as market risk, credit risk, and operational risk. Potential for higher returns and diversification. Hedge funds aim to generate higher returns compared to traditional investments. Their ability to use more complex strategies and invest in a broader range of assets can provide diversification benefits to investors. However, it's important to note that higher returns come with higher risks, and not all hedge funds are successful in achieving their objectives. It's crucial to conduct thorough research and due diligence before investing in a hedge fund. Understanding the investment strategies, track record, risk management practices, and fees of the fund is essential. Additionally, because hedge funds have limited regulation and disclosure requirements, investors should carefully evaluate the reputation and credibility of the fund manager and the fund's transparency. Overall, hedge funds provide sophisticated investors with the opportunity to pursue potentially higher returns through a wide range of investment strategies. However, due to their complex nature and higher risks, they are generally not suitable for inexperienced or risk-averse investors. For more videos about the stock market, please check out new videos on NKK Investing channel.